Good morning and welcome to Stock Market Today. It's Monday, May 13th, 2019, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at @Dan_Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email to follow along with this show. Get daily stock ideas for you to consider in your inbox every trading day before the market opens. So U.S. equities were mostly higher in Friday's trading. They erased an early loss. However, the S&P 500 still posted its biggest weekly loss since the December sell-off. Defensives and materials were the best performers. Healthcare was the only sector lower on the day. Consumer discretionary and energy also lagged. Treasuries were little changed to slightly weaker. The dollar was stronger on the yen cross, but weaker against the euro. Gold finished up 20 basis points, and WTI crude settled down about 10 basis points. So your outperformers, utilities, materials, staples, and REITs. Underperformers, healthcare, as we said, only group to finish lower. Discretionary, energy, and tech also underperformed the broader tape. As we get to the desk this morning, though, futures are down 1.2% after U.S. equities came under pressure last week. Asian markets were weaker overnight, with China off more than 1%. European markets are lower here this morning as well. Trade tensions continuing to linger in the marketplace. Treasuries are stronger across the curve this morning. Dollar is lagging on the risk-sensitive yen cross. As investors see risk in the market, they tend to bid up the yen. It's also a bit softer on the euro. Gold down 30 basis points. WTI crude is up 1.5%. So as we dive in, chart of the S&P 500, you can see early sell-off gives way to a late-day rally to close back above that key support level at 2850. It's really this zone from the April 1st gap that's been acting as support so far. So call it 2830 to 2850 in that zone. Rally reversed early losses to close above support again. That's the second time it happened in 2 days. But futures are under pressure as trade tensions linger. So we'll continue to look for support to hold in the 2850 area. Should that give way, we have to start thinking about this zone between the 200-day moving average, call it 2776, and the 2800 level. Resistance, 2940 to 2950 up there near the all-time highs, which we hit not too long ago. RSI holding above 40 so far. Again, remaining in bullish ranges. So that is a positive implication. We'll see how it plays out today. Again, as we said, futures are under pressure. Chaikin money flow does remain bullish. So I think the way to play it here is to continue to isolate your strong stocks in leading parts of the market when they become oversold, but just be sensitive to the headlines. Manage your risk, right? You should be doing that regardless of the headlines, but understand that volatility is likely to persist as long as we are seeing these trade tensions continue to take hold in the marketplace. Your market in a minute. What am I talking about in my note today to Chaikin Analytics? Clients stock show resilience with a late-day rally, but continuing trade tensions push futures lower this morning. SPY enters an oversold position, but money flow remains bullish. Software and services show relative strength during last week's sell-off. 10-year yield continues to move lower as it does near 2.4%. Major indexes from a power bar perspective still skewed to the bullish side of the coin. Dow, 6 bulls, 5 bears. S&P 500 up 46 basis points on Friday, 132 bulls to 78 bears. The NASDAQ was an underperformer, 20 bulls to 11 bears there, so still less than 2-to-1 bulls to bears on the NASDAQ. Small cap stocks also underperformed on the day, 554 bulls, 321 bears. Bonds downtick slightly, but they are rallying here this morning, and with the decrease in yields, with the continued trend lower in yields, utilities had a nice day, up 1.79%. 9 bullish or very bullish stocks, 0 bearish or very bearish stocks in the utilities group, and we'll look to see if that group can hold above support. We do have support for the XLU at the $57 level. According to the Chaikin Power Bar, small cap stocks and large cap stocks are somewhat bullish. Major indexes are all bullish now, but we'll see how things trade out today. Our stock of the day now, every day, our algorithm auto-generates a stock of the day, and we perform that analysis for you in real time here on this show. Today's stock of the day is Qorvo. Ticker symbol QRVO, closed at 75.07 on Friday, down 11 basis points. Qorvo has a very bullish rating due to very strong earnings performance, attractive financial metrics, strong price volume activity, and positive expert activity. So the 20 factors, 5 in each of these 4 categories, shake out to a very bullish Chaikin power gauge rating. So very bullish stock in a strong trend, in a strong industry group is the type of name that we want to consider owning. Taking a look at the ribbon now at the bottom of the screen, tells us where the power gauge rating has been and is over the past 12 months. And we can see we are on that bullish, very bullish rating. And the stock showed some good resilience last week as the market came under pressure. Relative strength actually continued to improve. So market and model are in agreement here. Dynamic duo in gear to the bullish side of the coin for Qorvo. Add to that the fact that the stock is oversold and trying to round out of that oversold position while Chaikin money flow is bullish. Qorvo is above the rising long-term trend line. Announced earnings recently that came in ahead of street expectations. So the way I kind of see it here is above the long-term trend line. Qorvo looks compelling for an entry to the long side. As always, we want to manage risk. Maybe you don't want to dive right into it this morning with the futures down over 1%, but it's certainly the type of name that you want to consider adding to the portfolio if you're following the process of buying very bullish and bullish stocks in leading parts of the market when those stocks are oversold. That is the process. Just be aware of what's going on in the marketplace. As I said, futures are down 1.2% this morning. So why don't we see how things open, see how everything shakes out. But I think as long as Qorvo is above this $70 level, it does look compelling on the long side of the portfolio. But again, we always want to manage risk. I always advocate for knowing where you're going to get out. Should the trade move against you, and you should know what that level is before you put the position on. Never get into a trade without knowing where you're going to get out if you're wrong. And then as the trade starts to work in your favor, you can move your stop level up to continue to manage risk. Our sector tracker now, looking at the movement of the major sectors over the last 5 days. Staples, energy, Utes, and REITs, top 4 groups. Now, all of the major sectors have finished lower over the past 5 days, so it's really a matter of trying to find the relative strength, and we can see that the relative performance has been skewed toward the more defensive areas of the market. Healthcare, comms, and financials are middle of the road. Discretionary, industrials, materials, and tech under pressure. And we can see industrials, materials, and tech are the groups that are most levered to the lingering trade war. I'd start to add discretionary in there as we start to think about what rising tariffs could mean to prices that the consumer is going to face as they're shopping here over the next couple of months. Discretionary names starting to come under pressure as well, joining in with the other trade-sensitive areas of the market in their underperformance. Now, our industry in focus today, healthcare services. Over the past 6 months, healthcare services has underperformed the S&P 500 by 15.9%. Remember, healthcare was a group that we've been eyeing for a while as it was coming under relative pressure, and the big services names had a lot to do that. However, the power bar ratio, which measures future potential, is strong with more bullish than bearish stocks. 12 bulls to 7 bears for the power bar ratio for healthcare services, earns it a rank of number 11 of 21 subsectors. It has moved up 2 slots over the past week. A couple of the some of the indicative names there. Triple S Management GTS has a very bullish Chaikin power gauge rating. LabCorp, ticker symbol LH, has a bullish Chaikin power gauge rating. WellCare Group, WCG, also has a very bullish Chaikin power gauge rating, and the rebound from oversold conditions in healthcare has actually now produced some overbought conditions for these stocks. And we're going to take a look at LabCorp here because LabCorp is exhibiting some of the traits that we refer to as a bullish personality change. Bullish stock, strong trend, strong industry group. Ticker at the bottom of the screen, we can see we went from neutral to bearish, and now we're back on that bullish rating, and the stock is beginning to outperform the market. So a bit of a personality change that we refer to. When the rating turns bullish and relative strength goes from bearish to bullish, that's a bullish personality change. So we want to add it to a watch list and look for opportunities to get involved, all else being equal. Well, right now, I'd say it's not the time. You have the market under pressure here this morning. Stock is overbought. Now, bullish money flow above a rising long-term trend line makes this a name that we want to add to a bullish watch list. As the market's under pressure here, we want to look for the names that have held up the best, start to build our watch lists, and when those stocks become oversold, then they become compelling entry points. But LabCorp looks good for a bullish watch list. Don't want to get involved here today with everything that's going on in the marketplace. Taking a look at yesterday's or Friday's gainers and losers. Let's look at our trending names now. Booking.com up nearly 5.5% following their earnings. Linger up 4.75% as their guidance was ahead of expectations. News A up 4% following their earnings, and BLL up 3% as they announced a repurchase. WellCare, we looked at WellCare as one of the groups in healthcare services, up 2.75% on the day on Friday. The loser side of the board, Symantec down on earnings to the tune of about 12.5%. Win 4.7%, Regeneron 3.5%. Both of those are earnings related. TPR giving some back after a rally on Thursday, and HBI, no real news to send that stock down about 3%. Earnings update, Friday surprises. There's Lynn beat by 15 cents. Marriott beat by 7 cents, and Meredith Corp, which has a bearish rating, beat by $1.23. So let's dive in now. Software and services remain leadership. Let's look at XSW relative to the SPY. Consolidating after this breakout, but holding up fairly well as the market sold off. RSI remains in bullish ranges. Don't love this negative divergence here, but looking for the hold in bullish ranges. And on a absolute basis, software continuing to do well as it holds above its breakout level. So we talk about looking for the areas of the market that show relative strength and hold up as the market sells off. This is one of those areas. It continues to be one of the go-to areas for long ideas. Mark Chaikin over the weekend in his market insights note called out Accenture, ACN, as a bullish idea. That's in the services portion of software and services. And this morning, we are looking at Oracle as a long idea. In my note to Chaikin Analytics clients, here's Oracle holding above the rising 50-day moving average and remaining above the rising 200-day moving average. So intermediate and long-term trends remain positive as both of these moving averages are moving higher. Oracle held up relatively well last week during the market sell-off. So again, group is holding up. Stock is holding up. We can see here the RSI is holding above 50, even as the stock has come under a little bit of pressure, but still holding up on a relative basis. And Chaikin money flow does remain bullish. So as we think about where we want to look for ideas, right, as the market holds above support, software and services is one of the areas of the market where we want to look for ideas, and we want to look for bullish and very bullish names when they become oversold. So look at a name like Accenture that Mark called out over the weekend. Look at a name like Oracle that I am calling out here today as potential bullish ideas to add to the portfolio as the market has become oversold. We look for the leading parts of the market, which are showing the best relative strength, and we're seeing that in software and services here today. At the same time, we are seeing a bit of a flight to safety. 10-year yield pushing towards support in the 2.37 to 2.4% area. We've been highlighting for a while that we think the path of least resistance for yields remains lower. That remains the case today. 10-year yield below the declining 50-day moving average, below the declining 200-day moving average. We did see a test of resistance at 2.6%, which has subsequently failed. At the same time, RSI continues to mark a series of lower highs, showing an inability to get out of bearish ranges. That tells us that this trend to the downside for 10-year yields does remain strong. Likely going to see a test of the 2.4% level. 10-year trading down around 2.42% here this morning, with S&P futures trading lower. Bit of a flight to safety towards treasuries here this morning. So that's going to wrap it up for today. Head over to chaikinanalytics.com/today. Sign up for that email. You get daily stock ideas for you to consider. As I said, they hit your inbox every trading day before the market opens. And if you like what you're seeing here, help us spread the word. Share our link on social media. Stock Market Today. Special thanks to StockCharts.com for airing this show in the 9:15 slot every trading day before the market opens. Good way to get your day started. Special thanks to See It Market for publishing our work. And I want to give a special thanks to you for tuning in every day to listen to our show. I will be back here tomorrow same time, same place. Have a great Monday, everyone. We will talk to you tomorrow.